In today's video, I'm just going to update my work in Apple, and this hasn't changed actually for quite some time, and this gives you a good example of how, we define risk and how a setup can actually play out for quite some time. In this example in Apple, the last setup was basically a symmetry setup. It's where this prior decline that was 24 days down and $14.61 was very similar to this decline of 23 trading days and $14.45. So the swings were similar in time and price. Now, it took a while before this really started going anywhere. You had a little bit of a bounce initially. It came back and retested the original support, started triggering new buy signals, and we know that if this is a more important low, that the typical target's going to be the 1272 extension of the swing into the zone, which means my potential upside target is 160.58. Now, obviously, we don't always make the targets on this setup, but we do more often than not, and it is something that we shoot for. But since we don't, the other thing that you typically want to do when you get involved in one of these setups is that you want to ratchet up stops as you go. For example, we're having a little bit of a trouble getting through the combination of the 618 retracement back to the last high that also overlaps the 1618 extension. We actually need to push through this to start looking better for a continued rally towards that target. So anyway, that's what we're looking at in Apple. But I'll give you an example of, stocks that are making those targets. And check this out. Amazon. Well, Amazon is actually just short of the target off of this last low. Facebook, okay, after holding that weekly support, it made two targets on the upside. Okay, third target would be the 170.58, but it's definitely time to ratchet up stops. Google. Now, Google, it's not really near the target, but the typical target for the two-step pattern is going to be up at this 1033 area if we do continue to rally, but still, ratchet up stops. Also, just a good example of, short-term decision that we had yesterday in Google was this two-step pattern into support. It hit, it held, it triggered on the buy side, and, just off of a day trade zone, you actually saw a $20 rally, and you only had to risk underneath either this low or underneath the low end of the zone. Let's see what else. I think I just have a couple more here. Oh, and of course Netflix. Now typically, I tell people that you don't want to sit through earnings unless you're okay with the risk and potentially losing everything, because you'll have times like where Google will go $50 the wrong way on you. But if you're okay with that, well, one of the things that happened in Netflix is you met two targets on the upside since this last setup. Okay, so that one also met targets, and that's pretty much it, as far as the FANG stocks. And then there are some of the other ones on my third workspace that we can also look at, but that's, I think, good enough for now. Bottom line, the focus today was to look at Apple and show you what the potential is, but I just also wanted to share that many moves do terminate at those extensions of the prior swings.